Welcome back to another video. Today I wanted to give you guys just a little quick tip. I know tax season is coming up. Most of you guys probably already filed, but in the future, I just wanted to show you guys something called tax loss harvesting. So something that is helpful to do is basically to sell a security that you are down on to shelter your tax gains. It could be that you've sold something that you made money on that year, or it could be that you received qualified dividends. Another thing I wanted to go over really quick is a wash sale. So if you wanted to sell, let's say you lost money on AT&T, you don't want to buy that back within 30 days. So that would be considered a wash sale. So what you could do is you could buy into, let's say, a telecommunications index fund, or you could buy into something like AT&T if you sold Verizon, because you'll basically track the returns of AT&T unless something completely out of the ordinary happens with AT&T. And the last thing for tax purposes is that if you do receive a qualified dividend, you have to hold the stock for at least 61 days, or else it can be considered ordinary income. But if you hold it for that 61 days, you're all good, and it's going to be considered a qualified dividend. It'll be taxed as capital gains. All right, so into the topic of today, I wanted to show you guys the differences between Schwab, Fidelity, Robinhood, and M1 Finance. So I think that they're all worth having, and I'm going to tell you guys exactly why right now. So starting out with margin rates. I've seen the best margin rates are on these online brokerages. So M1 Finance has a 2% margin rate for people who have a M1 Plus account, whereas Robinhood has a 2.5% margin rate. So they just decreased that. And what you see a lot with these online brokerages are that the good things about them are actually the bad things about them as well. So they kind of encourage you to overtrade because of that cheap margin. So with Fidelity and Schwab, the margin is a lot more expensive. It's usually up to about 6% unless you have over $1 million in assets, or basically you have enough money to give them a call and say, hey, give me a lower margin rate. I think Jeremy over at Financial Education has 1.5% on his margin rate through Fidelity. But anyways, that is a different topic for another day. So smooth trading. I think that Robinhood has probably the best of all of the brokerages here. Robinhood basically has the smoothest trading platform, which, like I said, is also one of its downfalls because it's too easy to overtrade on Robinhood. So it's a good and it's a bad. On Fidelity, it's a little bit better at Fidelity, Schwab, because you have more access to pre-market, aftermarket. Definitely, as far as smoothness of trading, M1 Finance takes last place. All right, the next thing I wanted to go over is intuitiveness. So Robinhood definitely takes the cake on being intuitive. It's very easy to pick up, and I definitely recommend that anybody new start out with Robinhood if you want to just get your feet wet. Okay, it's not a bad place to start. All right, the big boy brokerages are also a great place to go, and we'll get into more of those reasons later. But starting out on Robinhood is not a bad way to go. They also are offering 3 free stocks right now. I have the link in the description where you can get that below. M1 Finance is also very intuitive, but it takes a little bit of time to actually get the trades to go through. So this one's more effective for like a value investor. Like, for example, I just deposited $250 into my Roth IRA. So Roth IRA today is getting $250, and it's going to execute the trade eventually, essentially. So this pie portfolio is good for people who are willing to buy and hold long term, because you're not going to get in and out at exactly the price you want. You're just going to get in and out on the day that you want. So this could execute at 7:30. It could execute at 8:30. But typically you get one trading window, or if you get M1 Finance Plus, you get 2 trading windows. So one at lunch, one in the morning. So anyways, that is that. Research. So Fidelity and Schwab definitely have the superior research as far as individual stocks go. So let's go into some of these. Let's go into an equity really quick. All right, so we can go into this Schwab equity rating, and we basically can see a lot of these very important metrics. We can see the PE, a lot of these other important things, price to book ratio, and just all of these things that you really don't get as much of on M1 Finance or on Robinhood. You can also get some pretty good research on Fidelity over here. Let's see if we can pop over to Fidelity. So we pop over to Fidelity, we go into this news and research. We can go down to stocks. Now we can type in NVIDIA, and we've got all of these interesting things. So for example, increasing volume tends to indicate an upward price movement. More people are trading the stock, more people are interested in the stock. We got the PEG ratio, we got the ex-dividend date, and we've got all of these other things, right? So all of this research is not really available on M1 Finance and on Robinhood. They do have some interesting stories on M1 Finance and Robinhood where you can get a good idea of what's going on in the economy in general, what news stories are going on about stocks. But yeah, for that, you'll go over to the research tab on M1 Finance, or for Robinhood, you just go click on the stock itself and the story should be down there. And it'll tell you a little blurb about the stock. They do have Morningstar attached to Robinhood, but you do have to pay for that. And the next thing is customer service. So customer service is pretty good through Fidelity and Schwab, and pretty bad through M1 Finance and Robinhood. So Robinhood, from what I understand, you still can't call them at all. M1 Finance, I haven't been able to call them either. You have to pretty much email. I'm not sure if you can call them. I haven't tried to call them recently, but from what I understand, you can call Schwab and Fidelity a lot easier. I was just on the phone this morning with someone from Schwab because I tried to contribute to my Roth IRA, but I contributed to 2020, making me have $6,200 worth of contributions to 2020, and it needed to be in 2021. So I called them, and they fixed it this morning before the market even opened. So that's what you get with Schwab, and that's what you get with Fidelity. But with Robinhood and M1 Finance, you just kind of hope that things don't break. And that's kind of what it is. Robinhood, inaccurate data. So Robinhood is notorious for having inaccurate data, such as price to earnings multiples, having basically market caps, things that are not accurate, dividend yields that are not accurate. They're kind of notorious for having that bad data. And the last thing that I wanted to go over is that they all have partial shares, but M1 Finance has the PI system. I think that the PI system is very helpful for beginners. And anyways, the margin requirements, M1 Finance and Robinhood are better than Schwab and Fidelity for most people that have a normal amount of money. M1 Finance has retirement accounts. Robinhood does not. Fidelity and Schwab do. They are all free. So as far as cost, the base package on all these brokerages is free. So unless you want Robinhood Gold, M1 Finance Plus, or other different features, different packages, they are all free. Okay. Not every stock is available on every brokerage, such as over-the-counter stocks or just other different stocks. So that's another reason to have multiple brokerages, not just because there's risk in having all of your money with one company, but also you may not be able to buy the investments or have certain investment products that you may want to invest in. So that's another reason to diversify your brokerages. Batch selling. That's something that the smaller brokerages, online brokerages, don't actually have. So what I'm referring to is selling things that you bought at a certain period of time. So you want to sell things for long-term capital gains if at all possible. So in Schwab and Fidelity, I know there's other brokerages where you can do this. If you bought one tranche of stocks a year ago and you wanted to sell those specifically rather than selling the ones that you bought, 5 months ago, you could do that and it would help you tax-wise. So you don't want to be taxed at ordinary income when you could be taxed at long-term capital gains. Okay, 2022 IRA contributions. I know Schwab does it. I'm not sure about Fidelity, but I know that in M1 Finance, you have to contribute to either the current year or the past year. You can't contribute to a future year. And I also know that Robinhood, you cannot contribute at all. And the last thing that I wanted to say is that Schwab versus Fidelity, they have advisors, whereas M1 and Robinhood, you can barely get in contact with anybody. So anyways, hopefully you guys like this video. If you guys do want to hit my affiliate links and sign up, you'll get some free money with those. I think that these are all decent brokerages to start with, and they're good ways to run your retirement accounts through. That's all I got to say about this. I'll see you guys in the next video.